Hi, here we go. This is Seewing Yee. Welcome everyone. Welcome to the Yee Real Estate Network. And this is a webinar presentation is how to use a checkbook self-directed IRA to buy real estate properties. And the reason why we would like to present this type of topic is many of our investors are, for the past few years, have been using their self-directed IRAs to buy real estate properties out of state. However, as our investors progress along, as the experience level has increased, is behoove us to look into some advanced strategies with respect to self-directed IRAs, and so you can guys have more control of your real estate investments using IRAs. So my presenter, which I will introduce you very shortly, is his company specializing checkbook control IRA investment. So very exciting, very interesting, and for our investors that will take their investment acquisition to the next level, checkbook IRA is a very important topic. It's beginning to receive a lot of buzz, if you will, moving forward. So without further ado, my presenter is Bernard Reese from agentfinancial.com, as you can see. So Bernard, very excited to have you on board. Thank you so much to spend some time with us, with our investment group. And so take it away and show the people the benefit of a checkbook control self-directed IRA.
All right, let's do this. Seewing, thank you so much for having me on. I'm excited for today's presentation. I'm looking forward to feedback from yourself and the entire Yee Real Estate Network. It's a great topic, exciting topic, and once you learn about more advanced strategies, you never go back to the old ones. You broaden your horizons, learn about new and innovative ways to approach investing. Helps it boost your ROI and gives you a better investment experience. So without further ado, let's dive into how to use a Checkbook SD IRA to buy real estate rentals. And as a CPA, I've just got to put this up here. There's a disclaimer, and that's just to point out that anything you hear in today's presentation, while we aim to give you the highest quality info, it is for education purposes only. If you need tax, legal, or investment advice, you've got to go to your professional. And just a bit about myself and my company, my background is as a CPA with a focus on many areas of financial advisory, tax, investment, due diligence, and we've brought all those together to deliver innovative strategies. And a cornerstone of everything that we do is putting you in control, empowering you to invest on your terms and to give you financial self-determination. A key component of the financial industry is the fact that there may be some inherent bias in what they present to you. And that's primarily by the domination of the financial space by large mutual fund companies. And we're here to give you the ability to take your money and invest it in what are called alternative assets. And there's no better asset class than real estate. Real estate is a proven wealth builder, and it has stood the test of time more so than any other asset class. And always good to begin with something a bit comical, and you can see here, this representation of what you've got to be aware of when you head out into the financial marketplace. So you've got to think, you've got to put yourself in control, have a mind of your own, and ensure that you are being the best steward of your finances. So what is a self-directed IRA? That's a great question for us to begin with because the checkbook IRA is built upon the self-directed IRA. So what do we mean by self-directed? Is this some other kind of IRA? Does the tax code include a section for traditional IRAs, Roth IRAs, and self-directed IRAs? Well, in fact, a self-directed IRA is not a different kind of IRA from the perspective of the tax code or the IRS. It just means that it's an IRA in which many of the artificial restrictions that are imposed by financial institutions are removed. So in essence, the way I like to put it, the self-directed IRA is the true IRA. It's the IRA that allows you the full scope of investment opportunities that Congress and the IRS allow, in contrast with the IRAs that you'd set up with a brokerage company where they only allow you to buy assets that are on their platform. So when we say self-directed, we just mean you're going to be able to choose the assets that you want to you can invest in, but of course it's governed by the same rules as regular IRAs, because that's what it is. It's just an IRA. Well, why would you self-direct your IRA? Why would you want to broaden your investment horizons into real estate and other alternatives? Well, when you get off these platforms, you're able to take advantage of all the items mentioned in this bulleted list. When you invest in alternatives, you get to leverage your unique knowledge, your unique experience, and capitalize on your relationships. And all of these are interrelated. Of course, you have developed unique knowledge. Each one of us has. We each has a unique perspective that is unique to us. There's a lot of overlap. But to go beyond that, it's not just your knowledge. It may be the knowledge of a trusted advisor that's unique to you, somebody that has a unique perspective that's not being sold and mass marketed by large financial institutions. So by getting into a self-directed IRA and being able to direct your investments to the assets that you choose, you're able to benefit from the knowledge, experience, and opportunities that are unique to you and your network. In contrast with that, when you get to mutual funds, there's really not much that you can add. It's been conclusively proven that when you try to outsmart the financial marketplace in terms of mutual funds and stocks and bonds, the likelihood of you doing well are very slim. And financial advisors and money managers that try to outsmart the stock market consistently underperform. That may be surprising, but that's the near total complete consensus of all financial scholars and Nobel Prize winners. That may not be what you hear from your local financial salesperson, but that's what the scholarly research indicates. Beyond that, when you get into alternative assets, being that you have unique insight and unique opportunities, you can minimize risk while increasing returns. When you think about investments and assets, we've always got to think about those two dimensions, returns and risk. When somebody asks me, hey, Bernard, which one should I pursue? Which investment is going to give me a higher return? I'm always quick to point out that you're not asking all the questions that you should be asking. You've got to think about risk-adjusted returns. And once again, when you've got unique opportunities, when you have control over the investment, when you can pick your market based on insight that you have directly or through your network, you can control risk while increasing returns. In contrast, in the stock market, there's a relationship between risk and return. To get high returns, need high risk. With real estate, you can get lower risk with higher returns. And of course, you would want to self-direct so that you can diversify your portfolio. The stock market exhibits a high level of correlation between all the listed securities. So you're looking to get, if you really want to be diversified and really protect your portfolio, your overall portfolio from volatility, you need to diversify into asset classes that are not on the stock market. So I think that provides a great summary of why you should consider self-directing your IRA. And if it's something that you're already doing, it's good from time to time to get positive reinforcement about what you're doing. So there are many, many compelling reasons to choose self-directing. And just to talk a little bit about what are the regulations that apply to IRAs. When you've got your standard, regular, plain vanilla IRA that's restricted by the broker to investing in mutual funds, you don't actually have to know what the tax code says about IRAs, because regardless of what the tax code says and what the IRS says, your brokerage company, Fidelity, has already told you, hey, you can only invest in this and you can't invest in anything that we don't provide to you. When you get into self-directing, then you've got to actually have to be aware of, what does Congress say? And there are very few limitations. The only things that are disallowed to an IRA are collectibles and life insurance. So an IRA cannot buy artwork, rugs, antiques, most metals and gems, alcoholic beverages, and nor can it buy life insurance on your life. Your IRA can't buy a life insurance policy with you being the insured and beneficiary. However, that's all Congress specified as being off limits for an IRA. So let's think about the flip side. What investments are allowed? Well, guess what? Congress never said anything about that for a very simple reason. Congress only specified the few assets that are disallowed. Everything else is allowed. There's nothing in the tax code that says, oh, your IRA may be invested in mutual funds. Or it's not as if Fidelity is relying on some chapter or section or subchapter of the tax code that says something about using IRAs for mutual funds. The tax code says the same thing about mutual funds as it says about real estate, which is nothing. It's silent. The tax code does not stipulate. Rather, there's a short list of non-permitted investments. Everything else is allowed. And just to give you an idea of the scope of investments that are theoretically accessible, and the level of artificial restriction that's imposed by brokerage companies, you can see in the blue on the left side what a regular IRA can have. If you're worth your standard financial services company, you're going to have some combination stocks, bonds, mutual funds, and possibly annuities. On the right side, you can see the list is endless. You can use your IRA for just about anything. But of course, we've highlighted the first item on the list and bolded real estate rental property. Real estate rental property is consistently the most appealing and most popular asset for self-directed IRAs. And for the most part, that's our focus. Our focus is real estate. It's what our clients love most and what we specialize in. So what is a self-directed IRA? Now that we know at a high level why you should do it and what it's going to enable and empower you to do, let's take a deeper dive into structurally, how does this work? How does this flow? How can you actually get this done? So it's helpful to understand the structure of the IRA industry. And you can see at the top, what we've got is the Internal Revenue Code sections 408 and 408A. Those are the sections of the tax code that describe and create the tax advantages of IRAs, and it stipulates that IRAs must have a custodian. A custodian is regulated by state or federal state regulated financial company, such as a bank or trust company. Now, underneath that, there emerged brokerage custodians. Those are your Schwab, Fidelity, etc. And they're the ones that provide mutual funds and stock investments. And those companies are primarily in the investment business. They're not really in the IRA business. They just realized that, hey, we can use IRAs as a great conduit to funnel money to our investment platform. So they hung out these shingles, get your IRA, and they naturally dominated the space. In an industry that has close to $10 trillion in it, only a small drop of that, just a drop in the bucket, is really self-directed. So that's what we got, the brokerage custodians. On the opposite side of the spectrum, we've got self-directed IRA custodians and administrators, and these companies do not provide investments. They are in the business of administering IRAs, processing the paperwork for investments. And underneath that, within that world, the world of self-directed IRA custodians, is where the checkbook IRA finds its place. And as we proceed, you'll see the incredible benefit and power of the checkbook IRA versus your standard SD IRA. So this is just a little more detail on what happens on the regular standard IRA side, right? You get restricted to only certain investments. You get your free account, but we all know very well that there is no such thing as free, or at least very seldom do we encounter something that's free. So the question you've got to be asking yourself when something seems free is, how am I paying for it, and how much am I paying for it? And there are many visible and hidden fees, and you can follow that link to the SEC website just to get an idea of what those may be. And you'd be blown away how, I'd say, oblivious many investors are to the fees that they are paying. They're under the false impression that they have a free account, and nothing could be further from the truth. We've had experiences. We have people paying tens of thousands of dollars and under the impression that the account was free. In contrast, here we've got the self-directed IRA custodian. And then again, governed by Section 408, same part of the tax code, and they will allow you to invest in asset classes that are not available on your traditional brokerage platform. But here's where you may encounter some surprises. Some people get introduced to self-directed space, and then they're surprised to find out that they've got to pay to have these accounts, and these can get kind of pricey. Well, the first thing you've got to realize is, just to put this in perspective, you're depending, wherever you're coming from, you've also been paying for it. It's not free, it's just been invisible to you. And as I mentioned earlier, we've had clients come over and they'll, when you see how our checkbook IRAs are structured and the fees are really nominal, but people sometimes are taken aback. But then when you point out that you just paid $20,000 last year and you'll be saving, moving your assets to a self-directed structure with total control will cost you a nominal fee each year, you've actually just saved a bundle. But without checkbook control, here's what happens. When you want to buy your real estate asset with the custodian, you've got to have the custodian process the paperwork. Now, custodians have different fee structures. You can have asset-based fees, meaning some custodians are charging you a percentage of the value of your assets. They all have transactional fees. So anytime something has to happen for your account, you get a fee. Who benefits from the cash deposits, right? What happens when you're in the alternative space, right? You may be between deals. You may be getting rental income coming back to you. Well, where's that rental income going? It's going to the self-directed IRA custodian. And they've got a kind of other business, which they don't talk much about, but they are benefiting from sitting on hundreds of millions and billions of dollars of cash. You can see there's incredible value to having cash deposits, earning interest on that. And if they're part of banks, they have other ways of leveraging that for their regulatory capital. So with your regular self-directed IRA custodian, you're going to have cumbersome transacting, but you'll have unrestricted investing. You'll have fees, but again, a lot of the benefit of your funds are accruing to the custodian. Not all the benefit accrues to you. So to rectify that and truly give you, the investor and the owner of the funds, the complete and total control and the complete and total benefit of your assets, and to reduce your fees and to reduce your paperwork, we use the checkbook IRA structure. And here is an overview, a diagrammatic overview of how that works, and conceptually explain, how this works, what makes it tick, what is the legal and conceptual underpinning of the checkbook IRA? Well, we all understand that an IRA can be an investor in a publicly traded company, right? You can buy the stock of a publicly traded company on the secondary market, which is what you usually do when you buy stocks on your brokerage platform. Beyond that, we understand that an IRA can also participate in an IPO. It can buy the initial public offering of a company. Well, let's extend that just a bit further. It can also should be able to be a shareholder and investor in a startup company, in a company that's not publicly traded, but rather privately held. Well, once you understand that, then you begin to realize that there's something really neat and really powerful that can be done. What we do is we create a private company, and it has paperwork and documentation to make sure it will be compliant and be approved by the custodian for funding. And we tell the custodian we are making a private equity investment inside of a company that we've created for this purpose. Well, the company will have a bank account, and the self-directed IRA custodian will move the money that it's holding in the IRA account to the company bank account. Once the company is funded, that company will operate just like any other company. Its officers, its managers, and decision makers will deploy the company's capital in the way that they deem to be prudent and in the best interests of the company. And while we usually think of private companies being operating businesses, private companies can buy real estate. And that is exactly the structure that we implement. We set up a private company. We have the self-directed IRA custodian invest in that company. Once the money's there, you get to call the shots. You have an investment, you've got a rental property, you write the check, and the money goes right over. The funds need to go to escrow, you just write that check. There is no need for the custodian to countersign, no need for the custodian to process paperwork, no need for the custodian to charge you a transaction fee. The custodian's role has been completely marginalized, and you have been put in control. You are now the focus and the center of the investment strategy. So you can imagine what happens now is you also have direct access to the cash. If you're between deals, who can use that cash and benefit from it? Who can earn interest on that? When rental income comes back, who benefits from those? That's you. And with this structure, and if you work with our partner relationships, your annual custodian fees are just nominal. They're so low, you'd find it hard to believe how low your custodian fees will be. Because some of the custodians recognize that when they work with us and we implement this structure, they're for the most part out of the picture. There's really not much that they're doing. So they're pleased to take a small annual fee and be done with it. So you'll save a bundle on your custodian fees. And beyond that, you will have very, very nominal fees. So you will likely have very substantial savings while getting total control. So this is pure upside. It's just a win all around. Fees go down, control and flexibility goes up, paperwork goes down. So now that we've got a solid overview of how this works, let's see the anatomy of transacting and the flow of cash. So when we implement these, there are a couple of pieces that have to fall into place. So we've got to have an IRA and a self-directed IRA custodian. Then we've got to have the IRA LLC. We've specified LLC in this slide. We use some alternative structures as well. We may use trusts, for example, but for the most part, now, our go-to, the default is to use an LLC structure. So we'll have the LLC in the bank account, and then we'll have to fund this IRA and then IRA LLC. And you can see the funding for this can come from multiple sources. So you can make annual contributions. You can roll over from your regular IRA, wherever that may be. Well, when we call that actually an IRA transfer, or you can roll over from a qualified plan. More often than not, you'll be rolling over from a prior employer 401k. So there's funding, there's creating the IRA, funding it, creating the checkbook IRA structure, getting that funded. Once that's done, you are positioned to invest, write that check, wire, ACH, wherever you've got to do to buy your rental property. Well, with all this control, there is another set of IRA rules that you've got to be aware of anytime you're self-directing. And no discussion of self-directed IRAs and checkbook control is complete without providing an overview of those. And the way to understand these rules, the prohibited transaction rules, which sounds fairly ominous, prohibited transactions, but they're really simple once you understand them. The concept is Congress is willing to allow you to use your IRA to buy a range of asset classes, as we discussed. There's very little restricting the asset class that you choose. So you can certainly go ahead and buy that rental property. However, Congress did place limitations regarding who can transact with your IRA. So it's not about what your IRA can buy, but with who can it transact. And certain people are referred to as disqualified persons to the IRA. And you may be surprised to find out that you, the IRA owner, are the chief disqualified person, as is your spouse, parents and grandparents, children and children's spouses, as well as certain business entities in which there's ownership by disqualified persons. Well, what do these rules mean and what are their impact? Well, in practice, the impact is negligible. There really is no impact whatsoever. What they say is that if you've got a rental property that you've already bought in your own name, and then you think to yourself, you know what, I'd like to move this into my self-directed IRA, that cannot be done because you cannot sell a property to your IRA. You may not transact with your IRA. But had you not owned it, had it been owned by anybody other than on this short list of disqualified persons, your IRA can buy that property. So if you're going to go behind a turnkey property somewhere out of state, the IRA is the perfect vehicle with which to purchase that property. If you've got a property that you already own, your personal residence, that cannot be bought by your IRA. You've got to look for something that you do not have ownership in. So those are disqualified persons. In this slide, we talk a bit about what does transaction mean when we say prohibited transaction. But for the most part, to summarize it, you should not be a party in your personal capacity to a transaction involving your IRA. You can direct your IRA to do any kind of deal, but in your personal capacity, best not to be involved in it. Furthermore, your IRA can take a loan from a bank. Go try to do that, get that kind of loan, that kind of leverage with a mutual fund account. But with your IRA, if you've got $10,000 in there or $100,000, you can go to a bank and you could say, hey, I've got $100,000, I'm buying a property, can you lend me another 120? And you can get that. But of course, that loan must be non-recourse to you. Again, don't personally guarantee the loan because that's making you as an individual part of the transaction. So what would the theoretical pros and cons? Let's try to take an objective view, take a step back and figure out, is checkbook control something that's for me? What are the pros and cons? Well, you can see them out here. And we'll try to put them all in context. The pros, well, it's pretty clear. You're going to reduce fees and save. Ease of transacting. It makes doing deals it's just business as usual. no more paperwork, and of course you don't need custodian countersigning. You don't need to make sure every one of those T's are crossed and I's are dotted on the custodian paperwork. You will have enhanced asset protection. People don't think about asset protection too much when they think of IRAs, but they certainly should. Yes, it's true. Again, this is what happens is we're using our IRA framework that's been developed in the mutual fund space and applying that to the real estate space. Well, your mutual funds generally don't need to be held in an LLC. But a real estate investor is always wise and always benefits from enhanced asset protection by using an LLC. And when you move your IRA to real estate, you got to think like a real estate investor. And you would want to use an LLC or some other structure to protect your assets. You get enhanced privacy. And the reason for that is simple. When IRA custodians directly invest in an asset, in general, you're going to have to title the asset John Doe IRA, right? It's going to have the custodian's names, ABC custodian for benefit of John Doe IRA, and they very often require the account number. So you're throwing out your name and your IRA account number, and that's being in the paperwork that's being circulated. But if you use a properly structured LLC or trust, you'd be able to maintain privacy. No need for your name to show up anywhere. Of course, participate in auctions and sales. The idea here is many investments need speed or need immediate cash. The only way to do that and to participate in these kinds of deals is to have your money readily available. If you've got to get the deal and then get the paperwork over to the custodian and wait for that to be processed, you can lose a good deal. And then, of course, you can invest in certain assets that custodians are unable to custody. So the pros seem really, really powerful. But of course, there are definitely cons associated with everything. So why would you hesitate from setting up a checkbook control IRA? One thing that people find daunting is the initial setup process and fees. And we'll probably address that on a subsequent slide, but that is true. For the most part, if you go out there, try to get your checkbook IRA set up, you can get slapped with very substantial fees to get this all in place. With Resure, we've really simplified it. We want to make it easy for people to get into these structures, and the fees are nominal. Most of our clients are actually saving money the first year, but they're coming out well ahead. But even for those that aren't, by the time you hit year 2 or 3, you are well ahead using our structures. And then there's more complexity. Where should I put the LLC? There are 51 choices. That's a great question, and you need guidance and assistance for that. And again, we streamline that process for you. We stay abreast of what's going on in all domiciles. Getting the bank account open. Having your kind of regular self-directed IRA, you don't have to think about certain things. But when you've got the checkbook structure and the checkbook access, then you've got to get a bank account set up. And that can be cumbersome. You go to your bank and you say, I want to open up an account for an IRA LLC. You can be sure they're going to send you for the financial advisor to get your bank account, to get you an IRA and send you back to mutual funds. But you also, how do you do it in a way that's compliant? What's the right way to do it? Well, then again, of course, we at Resure, that's part of our service, is streamlining that entire process, leveraging our expertise and relationships. Another thing that people may be concerned about is inadvertent prohibited transactions. Once you get into self-directed space, you have the opportunity to engage in prohibited transactions. You could sell your personal residence or try to put your personal residence into your IRA. If you do that at Schwab, they won't take it. So is that a concern? In practice, while it is certainly possible, there's a higher possibility with Schwab or Fidelity, just the possibility of engaging in a prohibited transaction does not exist. The self-directed space, the possibility exists, but if you're cognizant of the few basic rules that apply, it's really simple. You buy rental properties, don't buy them from yourself, your spouse, your parents, or children, and you are set. It's really simple. You really should never encounter a prohibited transaction. Another reason people may hesitate is thinking about IRA LLC maintenance. And what that refers to is when you've got an LLC, these are formed by statutory law. That means each state has laws about LLCs, and they have rules about maintaining these LLCs. They may have some annual filing, some annual paperwork, some annual fee. Well, when you got your regular self-directed IRA without the checkbook structure, you don't have to deal with that. And yes, that is an excellent point. But of course, as part of our service, we do two things. Firstly, we're able to guide you to the domicile that is best suited to you. And oftentimes, one of the key things that we think about are maintenance costs. So getting you to a domicile that expects close to nothing from you to keep that maintained. If that works well for you, we can get you in that kind of domicile. Of course, we consider privacy, asset protection. There are the nature of your asset. There are many things that go into this, but we're there to streamline that process and make sure everything goes smoothly. And I guess here we've got a recap of those. So we assist with every aspect of the IRA LLC formation. We interface with custodians. We work closely with many custodians, have an excellent relationship with them, and have our direct contacts at those companies. We're going to educate you. We want all our clients to be positioned to invest successfully and compliantly. So we're going to give you information that you need to make sure that you're confident that you can avoid prohibited transactions. And we do all this for very, very competitive prices. So that's a little more the same, but comparing your various options for getting your self-directed structure in place. So that kind of sums up today's presentation in terms of what is an IRA with checkbook control and how can it be used for real estate investments. It's been great to present to Seewing Real Estate Network, and I certainly look forward to any feedback that you've got now or in the future. And on the page here, you've got my contact info, and definitely check out our websites. Lots of helpful information there.
Wow, Bernard, thank you very much. It's a very, very thorough, very concise and easy to understand presentation, Bernard. You make some technical subject matter, to make it in a layman's terms, if you will. So really appreciate you giving this great presentation. Even I learned a lot, and the knowledge that I gained from this presentation alone, I could go back to my database of investors and educate them as well. So this is a great value. So definitely, your checkbook control concept is a very, very good product. It's just applied to a lot of our investors' needs and situations. So we do have the right fit, Bernard. So your company, is very, this is your specialty. That's great. And it seems like you guys have some tremendous amount of support and servicing availability. So looking forward to doing business. And so this is a very good product, just going hand in hand with what we're doing in terms of our core philosophy of rental properties purchasing. So thank you so much, Bernard. Very educational. We're going to invite you back for subsequent webinars and to talk about other real estate topics, tax topics, and I'm sure we're going to have a very good working relationship. And thank you for your time. And thank you so much. Yeah, it's been a pleasure working with you, Bernard. Thank you.
Likewise, Seewing, thank you so much for having me on. I always enjoy sharing the knowledge and helping investors get control and reach financial self-determination.
Thank you. Likewise. Thank you so much, Bernard. Have a nice day. Okay. Bye-bye.